Hi, this is Pat with Energy Solution Partners, sharing with you our energy market view on Sunday, January 26th. Keep in mind there is a risk of loss when trading commodity futures and options. Our thought process hasn't changed here from what I've been sharing you over the last several weeks, and just updating some slides and not a lot of new stuff to go over, but just kind of updating where we see this fundamental market going here. And first and foremost, looking at our distillate inventory, and we continue to slide. We started 2014 at some low levels, and we've continued to watch these inventories decline. Looking where we're at today here, just a little over 120 million barrels compared to last year at this time is this green line. So we're 12 million barrels behind a year ago, which is about 10%. So carrying 10% fewer barrels of distillate inventory than a year ago. If you're wondering, this blue line here that we watched fall off the chart, that goes back to 2008, and if you remember, 2008 is when everything went hyperbolic. We did watch heating oil futures go up to $4. Crude oil peaked out at $147 that year before everything rolled over. So just looking at the comparisons here, and we do continue this low inventory story that I've been talking about. Here's a slide I shared with you a few weeks ago on the refinery utilization rates, and this was kind of as we expected to watch the refinery utilization drop here as we started 2014. It is a seasonal tendency as a refinery starts their turnaround process or maintenance season, and this red line is 2014 here, and so you can see how that has tailed off here. And since the first of the year, we have dropped this utilization rate by 7%. So still running at higher levels than we've seen past years, but the trend here, I guess, is what we're concerned with. Taking that refinery utilization and looking at just distillate production, and we peaked out here right at the end of the year, over 5.2 million barrels today, and since that time the distillate production has dropped nearly 15% in just a few weeks here. So the production of distillate does continue to fall along with our inventories dropping. So not a lot of relief in sight, I guess, as far as rebuilding some of these inventories that we've been talking about. With the setup with lower inventory rates and production dropping here, it is still curious to see where we're trading. I'm focusing on the May futures contract here, looking out towards spring and a lot of our ag use that kicks in the spring season here. But interesting on the futures price, 2014, where we're trading today compared to previous years, 2012, 2013. Even with the lower inventories, we do continue about 12 cents below where we were last year at this time. So inventories are lower, but interesting enough, prices are lower. But in any case, again, review, I've shared this with you before. Look what the seasonal tendency is from this point going forward. We've seen what happened in 2012, 2013 for those prices to head higher. And again, with our low inventory story here, we need to be aware of this. On this chart, I'm showing the front month futures contract, which is February, and comparing to that May. And we have seen the February market start to run here a little bit over the last couple of weeks. I think this is a demand story with the weather that we've had. All in all, I think the heating oil contract has kind of been forgotten about in the weather story. We've seen natural gas rally over 20%. For any of you involved in the propane, you know what that has done here. And heating oil has worked a little bit higher here, but it's kind of been forgotten about. And I still think this weather story could be a sleeping giant for our heating oil contract here. But as we've watched that front month run, nearly 20 cents here in the last couple of weeks, May has worked itself a little higher here, but it's kind of been left behind and not near as inspired. So seeing quite a difference in the price difference from the February futures to the May futures. With that, share again the forward curve, and this is the closing contract as of Friday evening. Front month sitting up here at near 3.14 a gallon. If we go out to June at 2.93, that's about 20 cents backwardation. Actually, there's 21 cents of backwardation in that market, and that is a huge number to see June trading 21 cents below the front month contract. And I look back at a little history here, and I only found one other time in the past 20 years that we've seen a number this big, and that was in 2000. I did not look to see what the weather story was in 2000, if that was part of it or not. But interesting enough, if you want to know what pricing did in 2000, we started that year at 65 cents a gallon on the futures contract, and we peaked in November at $1.10. Small numbers, but that's a 69% increase in the futures price in 2000. So just some history there and a little comparison's sake with this huge backwardation. But even from the February to the March contract here, we've got 12 cents of backwardation in this market, and is the focus now this last week of January, the focus is going to switch to the March contract here, as February is about ready to go off the board. And I can't help but think that we're going to move this March closer to where the February is here, and so March may be way undervalued if the demand continues to stay in here. All the weather forecast I've seen, we have not seen any let up in the forecast for this cold weather. Demand of heating oil has been very strong. According to the Department of Energy, the distillate demand over the last 4 weeks is 5% more than a year ago at this time. And so, again, looking at the fundamental story here, still positive this market, as I have been for the last several weeks, even though the market has been somewhat uninspired here and flat at best. But the fundamental story is here. I think what we're missing is really the speculators. And here's a chart again of the Commitment of Traders report showing the funds flow for the managed money or the speculative group. And you can see in late in 2013 they did add to their positions here in the heating oil market, and brought a lot of money to work here, which we did see the prices drive up through this process. But for whatever reason, when the calendar switched to 2014 here, we watched liquidation of these positions, and we peaked out here at 25,000 contracts in long, and in just a few short weeks we were below 5,000 contracts in a long position. So that's over 20,000 contracts that was liquidated in a real short time. I don't know what's behind this liquidation, why this group of investors has not had the interest in the heating oil market here, or if they will step back in and throw some money back into this. But it is a lot of money sitting on the sidelines here that has a potential to come to work and move this market real quickly. And with the fundamental story that's set up here, this could move this market real quick. Going back and revisiting the backwardation again between the February heating oil contract and the March heating oil contract. We did see the futures close Friday night of the March contract at 301.58 compared to the 313.74 in the February. So again, we've got 12 cents of backwardation between those 2 months. One strategy I do really like is to come in and get a long position on those March futures contract. And one way I think is a good way to play this, which is going to limit any downside risk that we have, is to buy an option. Options have become fairly reasonable in price. The volatility with the sideways trade, the volatility is at low levels, which cheapens the price of these options. And so the option I like on the March futures, and again this is based on Friday's close, so when we come in Monday morning it could look a lot different. But 305 March heating oil option can be bought for about 5 cents a gallon. And with this, you have all the upside. So if the March gains steam, tries to get closer to the February contract like I'm expecting, we've got that upside potential. If it isn't correct, the maximum risk that we have on that trade is the 5 cent cost of the option. So if you do have a futures account set up and would like to visit on this further, give me a call and we can get some current quotes and put some positions in place. If you don't have a futures account in place with us, I'd be happy to visit with you about that and getting that established as well. So with that, everybody stay warm, and hopefully you're finding plenty of supply of the product you need, whether it's number one fuel or for those of you in the propane business. I know the struggles that you're going through. Kind of some wild markets there, and we can sure visit with you on that side of it as well. So with that, feel free to give us a call. I'd love to visit with you. Have a good day.